What is a savings account? A savings account is a basic bank deposit product that allows the customer to deposit money, keep it safe, and withdraw funds while the balance in the account earns a small interest. The savings account that you will find in banks, credit unions, and other financial institutions have FDIC insurance coverage and usually pays interest on the deposits. The interest rates have gone down over the years, and it now pays less than 2% per annum as we approach the middle of 2019. However, you can find a savings account that offers a higher interest rate than other accounts. By their technical nature, savings accounts are akin to time deposits. Technically, the bank can require the depositor to notify the bank before withdrawing the funds or charge a penalty when the account holder withdraws the money before a specified date. While banks do not usually exercise this right, some institutions restrict the number of transactions that a depositor can make in and out of a savings account per month. They also charge fees that depend on the average balance an account holder keeps in his account. Banks do not provide checks for a savings account as a general practice. It is relatively easy to transfer funds to and from a savings account, but a depositor must observe the federal limits on the number and types of withdrawals he can make per statement cycle. While deposits are without limits, you can make as many as you wish. The law restricts some types of telephone and electronic withdrawals, exclusive of ATM withdrawals, and transfers to only 6 per statement cycle. In addition to the traditional savings account that we have described here, the United States and other countries allow some people to open special savings accounts for specific purposes. Examples of these are Health Savings Account and Coverdell Education Savings Account. Investors open these accounts to build funds they will use to pay for specific items, but these accounts have special rules and specific tax provisions to govern them. The interest that banks pay on a savings account. What probably is its most obvious feature is that a savings account's deposited funds accumulate to earn interest over time. If you just keep your money under the mattress or in your wall safe, you could miss out on some earning potential, aside from the security risks you take. In a savings account, you can earn interest on your money, although the rate will depend on which bank or institution you open your account. Online banks are offering higher rates because they have lower overhead costs than traditional brick-and-mortar banks. Banks normally compound interest when they are computing for how much interest they will pay the depositor. Compounding interest is basically paying interest on interest. You earn from your initial deposit just like with simple interest, and then you will continue to earn interest on the initial deposit together with the interest that you have already earned, as long as you don't withdraw them. In essence, the bank computes interest on your running balance, so it's constantly changing. If you will let your money stay in your account, the interest will continue to compound, and your money will grow quicker. When you compare it with certificate of deposit and other interest-bearing bank products, a savings account will earn a lower rate of interest. You should shop for the best savings account terms and rates, although the highest savings rate you may find would probably still be lower than that of other types of accounts. So if you're willing to keep your money in the bank for a prolonged period, from a few months to a few years, you will earn more if you place them in a certificate of deposit. That's it for now. On our website, you can find more posts, as well as calculators and other financial tools. Considering savings account? Which is better for you? We would love to know your thoughts, so feel free to share them with us in the comments below. I hope you enjoyed it, and don't forget to subscribe to our channel on YouTube to get more free financial educative videos.